Most people think financial freedom is a number, a big one. Hit it, and life magically unlocks. But real freedom? It shows up quieter, in choices, in calendar space, in a calm you can't fake. If you don't feel free yet, but you've been doing the right things, saving, simplifying, setting systems, you might be closer than you think. This video will show you 7 subtle signs you're on track for financial freedom, even if it doesn't look dramatic from the outside. Because here's the truth. Freedom usually arrives before it feels like it. The math clicks first. The feeling catches up later. Let's get into it. Sign 1. Engineered burn rate. Most people let spending swell to match income. You don't. Your lifestyle is cheaper than your paycheck, on purpose. You pre-decide limits and build the month like a blueprint. Housing fits easily. Transport is simple and paid down. Subscriptions trimmed. Groceries planned. Variable spends capped. Not extreme, just intentional and repeatable. You've designed for predictability. Fixed costs are clean and low. Annual expenses, insurance, travel, maintenance live in sinking funds, so surprises are scheduled, not chaotic. Stress test: if a bill jumps or a paycheck dips, the plan still holds. You bend, you don't break. That's not luck, it's architecture. When income rises, your plan doesn't. Raises widen the surplus instead of the lifestyle. Bonuses don't become new bills. Your burn rate, what life costs each month, trends down or stays steady while income inches up. That spread, every single month, becomes fuel. It kills what drags, buys what compounds, and quietly stacks options. The larger the spread, the faster the glide. That gap is your engine. Sign 2. First-Dibs Savings. You don't save what's left. You save first and live on the rest. The moment income lands, money moves. Retirement, brokerage, buffer. It's not willpower, it's wiring. You've set a minimum savings rate that holds in slow months, and an escalator that ratchets up after raises and bonuses. Lifestyle stays level, the contribution climbs. Windfalls follow rules, e.g. 70% invest, 20% buffer, 10% fun, pre-decided, not emotional. Irregular income, you smooth it. Autos pull from an average month, not your best month. Overflow tops up goals in order, high interest debt, cash cushion, compounding. This flips the script. Spending adapts to the plan, not the plan to spending. Identity flips too. You're an automatic investor every pay cycle. Consistency does the heavy lifting. First you, then the world. Sign 3. Money on rails. You've taken money off the white-knuckle, manual path. Decisions aren't ad hoc anymore, they follow tracks. Payday hits and a cascade runs. Bills bucket funds, invest bucket buys. Runway, cash tops up. Your everyday card gets exactly what's safe to spend, nothing more. Credit cards, auto-pay in full. Transfers, dated to land right after income, so timing never traps you. Accounts are named with jobs, bills, invest, buffer, spend, no guessing. You've added guardrails, low balance alerts, unusual spend pings, quarterly subscription sweep, keep, cut, or downgrade in one pass. Investing runs on a standing order, not vibes. You rebalance on a calendar, say twice a year, not on headlines. If income dips, you throttle, not cancel. The system flexes but keeps moving. Why this works? Systems don't forget. They don't have bad days or get busy. Friction goes down. Follow-through goes up. Set it once. Let it run. Check it on schedule. Consistency becomes your edge. Sign 4. Layered income. Single-source income is a single point of failure. You're fixing that by building layers, not chasing lottery tickets. There's a core that keeps the lights on, salary, stable clients. Then a growth layer that scales with skill, better rates, promotions, equity, rev share. And at least one decoupled layer, cash flow that isn't tied hour for hour to your time. Templates, courses, royalties, small media, rental, dividends. You're not hoarding gigs, you're stacking leverage. Code, content, capital, or community. One of those works while you don't. A weekend project that pays a bill. A retainer that smooths slow months. A tiny product that sells while you sleep. Skill stacking raises your floor, you're harder to replace. And your ceiling, your price and upside improve. With options, you negotiate differently, more no, better yes. You also keep lifestyle steady while layers grow. New dollars don't create new bills, they buy down risk and buy up freedom. If one stream slows, the rest carry the load. Volatility becomes noise. You're laying pipes, not hauling buckets. Optionality is freedom. Sign 5. Low debt gravity. Debt adds drag. The more you carry, and the pricier it is, the harder everything feels. You've been reducing that pull. High interest balances are gone or shrinking fast. You attacked the worst rates first, rolled down payments, and refused to let small debts linger. Cards are tools, not float. Balances don't survive the month. Your big rocks are sane. Housing sits well below what a bank would approve. Cars are reliable, not status projects. No payment needs everything to go right. You've mapped the order of operations. Kill double-digit interest, then tame mid-rate loan, and then keep only what's cheap and productive. And you choose terms that make sense for your sleep, not for maximum leverage. You also prevent rebound debt. Annual costs live in sinking funds. Repairs and renewals are expected, not emergencies. When life taps the shoulder, you don't reach for a lender. Debt to income ticks down. Minimums shrink. Each month, more of your cash is yours to direct toward compounding flexibility and time. Less gravity equals more escape velocity. Freedom accelerates when drag disappears. Sign 6. Built-in shock absorber. Life jolts. Your plan expects turbulence. You keep real runway, 3-6 months of core expenses liquid, and park irregulars in sinking funds, insurance, renewals, repairs. Unexpected turns into already budgeted. Your assumptions are conservative by design, income rounded down. Expenses rounded up, returns set to boring. No single point of failure. You've pre-written circuit breakers for bad months, auto-invest throttles, not stops. A trim list of nice-to-haves pauses first. Within 24 hours, you can switch to a lean mode without chaos. Protection is in place. Health, term life, disability where needed. Deductibles you can actually cover because the cash is there. Emergency equals inconvenience, not disaster. When something hits, your sequence is calm. Protect, sustain momentum, restore. You absorb, then adjust. The plan survives the punch. This isn't hoarding, it's control. A good buffer lets you take good risks. Job changes, skill bets, a sabbatical without capsizing the ship. Shocks turn into speed bumps. Slack is a strategy. Sign 7. Time tilt. Money used to be the headline. Now the calendar is. You're measuring progress in hours you control, not things you collect. You say no more. You batch errands. You guard deep work blocks like assets. Low-value tasks get eliminated, automated, delegated in that order. You buy back time on purpose. Groceries delivered when it costs less than an hour of your best work. A shorter commute over a shinier car. Fewer subscriptions, fewer decisions, more focus. Your weeks have buffers and boundaries. Even busy seasons include empty space by design. Urgency is rare. Emergencies don't rewrite your life. This isn't laziness, it's leverage. The less your income depends on minutes, the freer your choices become. And the more time you free, the better your money decisions get. You've shifted the scoreboard from how much did I spend to how much did I own today. From status to sovereignty. Freedom shows up on your calendar before it shows up in your headlines. Financial freedom rarely arrives with fireworks. It sneaks in as calm, quiet months, predictable money, a calendar that feels like yours. Before it looks impressive, it feels uneventful. The math clicks first, the feeling catches up later. That's not boring, that's progress. If even a few of these signs showed up in your life, you're closer than you think. Keep the gap wide, keep the systems running, keep buying back time. The rest compounds. If this helped you see your progress more clearly, tap like so it reaches someone who needs the nudge. Hit subscribe for more quietly powerful money moves. Watch next. Payday Autopilot. 7 money flows that run themselves. In that video, I'll show you how to set up simple automations so bills pay themselves, investments buy on schedule, and your buffer refills, without you micromanaging every rupee or dollar. See you there.